To become a life insurance advisor, click the link in our bio.
You're solving the wrong problem. Your client comes to buy insurance, but the problem is not insurance. The problem is uncertainty. And what do? Client comes, we give term. Another comes, we give health. Third comes, we give ULIP. Same solution for every problem. If we were a doctor and gave them the same medicine to every patient, what would happen? That's exactly what's happening in insurance. The client says, I want a policy. But what they're actually saying is, I'm worried. And that worry doesn't come from just one place. To solve this problem and make your job easier, Aditya Birla Life Insurance launched a report, the Anishchit Index, and it highlights something very simple. The Anishchit Index today stands at 79, up from 74 last year, which means uncertainty is not reducing, it's increasing. In fact, 73% of people report being extremely worried about their future, and only 5% people feel financially in control. Only 5%. Uncertainty is not random, it is structured. It comes from 11 different areas, and every client is experiencing some of them. The client is not looking for a product. They are trying to gain control over the uncertain parts of their life, no matter who they are or where they live. Let's take metros first. In metros, the uncertainty index is 80. And the biggest concerns are digital fraud, urban safety, and inflation, and rising healthcare costs. So your metro client is not just thinking about returns. He's thinking, is my money even safe? Now look at how this changes across India. Tier 1 cities, index 73. People are worried about job uncertainty, work-life stress, financial pressure. Tier 2 cities, index 78. Now concerns shift to healthcare costs, climate disruptions, emotional stress. Tier 3 towns, highest at 86. Highest. And here people are worried about income stability, household strain, and basic safety. Same country, different uncertainties. And you're giving the same product? Now let's go deeper. Let's understand these uncertainties not like advisors, but like planners. 1. Economic volatility. Have you noticed even after income increases, people don't feel relaxed? Earlier, salary came, expenses were predictable. Life felt stable. Today, income has increased, but so has inflation. Global events affect us. Companies look stable, but layoffs are happening. So the problem is not money. The problem is loss of predictability. Mid-income salaried individuals feel this the most because they have the most to lose. Their fear is simple. Will the life I'm living today continue tomorrow? Your term insurance is not just death cover, it's income backup. And long-term discipline plans give the client a sense that even if the markets fluctuate, their system continues. The client is not chasing returns, they are looking for stability. 2. Personal finance insecurity. Have you seen clients who earn well but are still confused? The problem is not lack of money. The problem is lack of direction. Savings are scattered. Investments are random. There is no structure. And when there is no structure, there is no confidence. Young earners, first generation earners, they have learned how to earn, but not how to manage. Their fear is, am I making the wrong decisions? Am I falling behind? Your role here is not to give a product, but to give structure. It could be ULIP, it could be endowment. The product is not important. The framework is. Clarity creates confidence. 3. Health risk. In India, people are less afraid of illness and more afraid of the medical bill. A surgery of rupees 5 to 10 lakh, and the problem is not just the bill. If the earning member is hospitalized, income also stops. Everyone feels this, but especially primary earners. Their fear is, can I afford a treatment? How will the household run? Health insurance covers the bill. Critical illness covers the income gap. Insurance is not for illness, it's for continuity of life. 4. Employment uncertainty. Today you have a job, but no guarantee. Earlier, people worked 20 years in one company. Today, role changes, layoffs, AI disruption, gig work. Income is no longer permanent. The fear is simple. What if income stops? Planning here means creating an income backup. Your job may not be stable. Your plan should be. 5. Digital risk. Do you know what India's biggest fear today is? Online fraud. UPI, apps, digital money, convenience has increased, but so has risk. And the problem, this risk is invisible. The fear is my money safe? Here your role is just not product, it is awareness, diversification and safety structure. Earlier, earning money was the challenge. Today, protecting is. 6. Responsibility pressure. As long as you live only for yourself, life feels simple. Marriage, children, parents, responsibility multiplies. And each responsibility adds silent pressure. The fear is, what happens if I'm not there? Term insurance does not replace income, it replaces responsibility. The client is not calculating an amount, they are calculating their responsibility. 7. Retirement. The problem with retirement is not that people don't plan, it's that they plan too late. Life expectancy is increasing, which means 20 to 25 years without income. The fear is, who will I depend on? A pension is simply a salary replacement. Retirement planning is dignity planning. 8. Child future. Parents can compromise for themselves, but not for their children. Education is getting expensive. Competition is increasing. The fear is, will my child's future be secure? This needs goal-based planning. This is not a financial decision, it's an emotional one. 9 to 11 environment plus government policy plus mental health. Some things you cannot control, but you cannot ignore them either. Climate change, government policy changes, mental stress. All of this creates background anxiety. The fear is, the future is unpredictable and out of control. Your role is to bring control through action. If pollution is high, increase health cover. If business depends on policy, secure it. Life will remain uncertain. Your plan should not. You saw it. 11 uncertainties. And every client strongly feels 2 to 3 of them. If you start with the product, you are guessing. If you start with uncertainty, you are planning. The client is not buying insurance, they are buying control. Remember the advisor rise rule. Don't memorize products. Identify uncertainty. That's when you stop being an advisor and become a planner. Subscribe for more insights from the Anishchit report. Read the full report and explore becoming an advisor through the links in our description. See you in the next episode.
Subscribe to Advisor Rise and hit the bell icon to never miss a video.